Welcome back, everyone. Thanks for joining us for this update on the HFRI indices for September 2024. Joining us today is Ken Hines, president of HFR Index. Welcome, Ken.
Thanks, Anika.
Can you give us an overview of what the month of September looked like for the HFRI?
Yeah, the HFR had a good month in the month of September, the last month of the third quarter. And the third quarter was really a volatile market cycle. Right at the beginning of August, we saw a spike in intra-quarter volatility, a 3-day spike in volatility that we haven't seen in years, maybe since the beginning of the pandemic. And so there's a real major dislocation that hedge funds had to navigate over that time that significantly affected equities and fixed income. And we saw that hedge funds were positive in both months, probably some recovery throughout the month of August after the first few days, but positive both months and strong leadership. So really heading into the end of the year, the big picture has changed over the third quarter. We came into the quarter still thinking a lot about ongoing inflationary pressures, and that has definitely moderated. And as we come out of the quarter, as we begin the fourth quarter, much more of an emphasis not only on a weaker economy and lower inflation, but actually probably more specifically on Fed lowering interest rates and really engineering a soft landing for the economy. And so we saw strong performance really led by the event-driven strategies, and we'll talk about that in the next slide.
Okay, so yeah, let's look at the composite indices performance for September.
Yeah, so here you see that the overall event-driven index, strong gain of about 1.8%. We saw also equity hedge asset weighted very near that, and those both very near the performance of U.S. equities. We also have the fixed income based relative value asset weighted index, 1.4% gain, going all the way down to the composites, which were in the 1.3 to 1.4% range. So it was a month where we saw strong performance from all of the strategy areas. Even we saw stronger relative performance in larger funds where you see the asset weighted composite outperforming at the composite level and at the strategy level. And we saw an important inflection point in macro, as we talked about it, earlier and on previous videos. Macro led strategies in the first 4 months of the year, coming right out of the gate, very strong performance. And then really before September had 4 consecutive months of decline when a lot of the emphasis was on those continued inflation and higher interest rates. And as that all reversed in August and throughout September, we've seen those performance turn positive again heading into the fourth quarter.
So taking a longer look, how does that story look year to date?
Yeah, you can see here that the leadership continues to be in the equity hedge space, which is very exciting. You have nearly 11% gain for the HFRI 400 equity hedge, about 10% in the HFRI equity hedge asset weighted. Again, that's the exact same constituents that are in the HFRI, just rather than equally weighting them, your asset weighting. So you get a slightly different picture of the performance in a given month. 8% gain, for a little better than 8% for the overall equally weighted HFRI, near that for the HFRI 400, and then about 8% for event-driven. So it's really the directional strategies that have done well and have done well recently. That was not the case a quarter ago. You didn't have leadership from equity hedge and certainly not event-driven right out of the gate. But I think as people are looking into year-end, and they're now thinking about very different things in terms of, rather than the inflation risk that people saw, certainly the geopolitical risk is still with us, both military conflicts as well as election risk. That will all be with us certainly for the next month, and expectations of probably changes longer than that. But when you think about that and you think about the inflection point, people are now thinking about M&A through that environment into year end and the beginning of the year with a soft landing with lower interest rates. That could be a real strong cycle for M&A to end the year and begin the following year.
And what about if we look at specific sub-strategies, what has done well in September?
Yes, the leading area, you can see here that you had 4 areas of sub-strategy performance, smaller areas that significantly outperformed U.S. equities. those being fundamental growth, which is, as you know, growth-oriented equities, technology, and some emerging markets, and other high growth areas. Those returned 4.7%, which is a very strong month in September. You also had the macro discretionary thematic, and we usually like to talk about this sometimes in months like August and September, where you have a clear inflection point. Sometimes the macro strategies, sometimes the trend following strategies will underperform. It's not surprising to see the fundamental strategies, which are sort of contrarian in nature, producing strong performance. So here we have what we expected, 3.75% gain from the HFRI macro discretionary. Credit arbitrage, also a good strategy for interest rate decline and credit tightening, 2.2% there, and then 2.2% for the equity hedge quantitative directional index. And we're going to talk about the next slide, because if you know from the previous videos that we've done, that's been the leading area of performance thus far in the first 3 quarters of the year.
Okay, so let's look at the year-to-date Substrategy indices. What do you see?
Yeah, it's not even close. You can see the quantitative directional index, we were just leading with that coming out of September, but 22.7% gain. So a very significant, strong month and year for these strategies. And again, these are very quantitative in nature. They're similar to CTAs, but they don't go across any type of assets. They're quantitative, similar to market neutral, but they're not market neutral. They're strongly directional, long and short. They're similar to CTAs, but they're only equities, and they're not in commodities and fixed income currencies, things like that. So that's really been the sweet spot for hedge fund performance right now. You can see 22.7% gain in the first 3 quarters of the year. Other strong areas, all of these ahead of the gain of U.S. equities. You can see healthcare, 14.4% gain, and that was with a little bit of a pullback in the month of September. So even though other growth areas did well, September was not a great month for healthcare. So that had been up a little bit more. You can see nearly 14% gain for fundamental growth, and then finally, not surprising, technology up 13.75%. Again, all of those ahead of large cap U.S. equities thus far in the first 3 quarters of the year.
Excellent. Thank you for that roundup. Do you have any final comments?
Yeah, I want to make sure to remind everybody, we've got the new website up and running. You can see all the indices and all the press releases and everything we put out is there. Visit www.hfr.com. If you're watching this video, you know we do regular performance updates on YouTube. Please subscribe to the channel, and if you have questions that you'd like to see us address in the upcoming video, happy to receive those questions. You can send an email to me, Ken Hines, or send it to indices@hfr.com. And last thing, when you do visit the website, feel free to check out the investor guidebook. You can go ahead and click on it and download it. It talks a lot about the utility and the use case of all of our investable indices and how institutions are using those benchmarks of performance to guide their decision making and certainly their benchmarking. So thanks a lot, and we look forward to speaking with you next month.
Thank you, Ken.